Let's go ahead and open up our grain trade, and we'll bring in help from Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky, and get his analysis on what we're seeing this morning. Well, the corn market was kind of dull overnight. Let's see how we're opening up in the daytime session here. So on the first trades on the March, right now we're trading a penny and a quarter lower. The first trade now 377 as we're looking at it here. Had a high of 378 and 3/4, so we're off of that much closer to the low than we are the high of the overnight range. December new crop corn, well, it's at 401. That would be down a penny and a quarter this morning. On the soybeans, we had the export sales news to talk about, and we'll get to that in a second, but we had the soybeans trading mixed. March unchanged. Well, now it's a 1/4 cent higher. I take that back. It's at 9.18. We have May up a 1/2 cent, and we have September down a 1/2 cent at 9.50 and 3/4. So no enthusiasm here whatsoever. Let's take a look at the wheat market. In Chicago, March now down 2 at 5.22 1/4 per bushel. That's a penny off its low of the overnight trade in early morning hours. July new crop, by the way, down 2 3/4 at 5.29 1/4. In Kansas City wheat, we have the March contract 2 lower at 5.06 3/4. July down 3 at 5.23. Minneapolis spring wheat trade has the March contract at 5.73 1/4. That would be down 2 1/4. Meanwhile, July down 1/4 cent. And cotton, how's it opening up today? Well, we have March down 63 points now at 73.01 per pound. And new crop December down 40 points at 73.72. All right, Dewey, no obvious enthusiasm here in the grain trade. We had some overnight export sales announced for soybeans, and it was a batch of 612,000 tons. They were sold to China, but the talk was they had bought 2 to 2.5 million tons. So the question is, what is the deal with that? Where's the rest of that?
Well, I think that's what everybody's trying to think about. Where's the rest of the sales? They may be coming here, you know. I think what China did Friday, they just made a goodwill token purchase here, and you got a little bit here this morning. You know, I've heard we might see China take up to 8 million. I'm giving them benefit of the doubt. They could take up to 10 million. But, you know, here's what your viewers need to look at here. The U.S. Comprises about 33% of the total global exports. Brazil is 51%. We've lost business to them, and anybody that knows that when you lose business, chances of getting it back are really slim to none. I think that those numbers will stabilize. They may deteriorate a little bit more, but don't count on us getting back the business that we've lost. You know, that's the long and short of it.
I'm hearing some traders expect higher Russian wheat production this year. Do you agree?
I've heard that. We'll probably get an idea, you know, come Friday when we see the supply-demand report. So let's look and see what we see then.
You know, that's a good point. The reports are coming up Friday, and they will contain a lot of the information that should have come out in January. It'll be a combined report, and boy, there will be all kinds of important data in that. So we look forward to that at the end of this week. That could be a market-moving factor, too. Dewey, we'll come back here in a moment, and we will open up our cattle and hog trade in just a moment when we come back after these messages. We're talking with Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. And Dewey, let's open up our cattle and hog trade right now on a Monday and take a look at our futures in Chicago. Well, on the cattle, here we go with live cattle. We have February 40 higher this morning at 125.85. The April up 38 at 126.65. On the feeder cattle side, we'll roll over there, and the March contract 47 higher at 143 even per hundred. Meanwhile, April now 38 higher at 144.38. So consistent gains here all across on live cattle and feeder cattle. Moderate gains to begin on Monday here. If we look at the lean hog trade, this is how we're starting. Right now, the February just one tick higher. It's at 56.38. And we have the April contract 20 higher at 60.33 this morning. That would be just a nickel off of its high of the opening range. So apparently we've been on both sides of unchanged here in the hog market so far this morning. Back to the cattle, Dewey, if we look at a chart, we had that big reversal on the live cattle last week, and that was the final trading day of January. And I just wondered how much damage that actually did to the trade here. Does that tell you that maybe the top may be in here?
Well, it certainly does. If you look at that nasty reversal that we had, if you're looking there at the chart, you don't see any reversals that look quite as bad, going back as what this one does. So, yeah, this one hurt here, and this one's probably done some damage technically.
What about the feeders, though? Because they have a whole different chart pattern than what the live cattle market did.
Yeah, they have. Feeders really, though, haven't gone much of anywhere here. It looks like feeders, rather, are just going to be resigned to stay in a trade range here till something comes up.
And then we had the cash cattle market that developed on Friday, but the news coming out of that is surprisingly light here, Dewey. I haven't heard much volume reported. I'm going to guess that maybe we will get an update here by mid-morning from USDA with the rest of the numbers here. It must have been really late on Friday then.
Yeah, I haven't heard of any additional reports here. Of course, you got to look. Your cutout values were down last week. Possibly the packers are looking, maybe trying to pick cattle up a little bit cheaper.
Okay, the beef cutout values, they have really narrowed up that spread between the choice cuts and the selects here in the last few days, getting, in that neighborhood of about $1 between those. What does that tell you?
Well, that just kind of tells you, you got just a little bit of, demand that is coming in here. But, I think that is kind of being dwarfed by what we're looking at technically to develop in the market.
Then on the cash hogs, we have had such a drop in the hog futures. But if you look at the cash market, it was lower Friday. And then all the primal cuts were sharply lower. Where is the bottom in that trade?
Well, we're obviously getting closer to the bottom. I think that when you look at the April contract, we're probably going to see some support pick up around here, maybe about 58 and a quarter, somewhere down in that area. I don't know that we've put a bottom in on the hogs just yet.
Okay, well, Dewey, thank you for helping to open up our trade here on a Monday. Always a pleasure. Dewey Strickler of AgWatch Market Advisors in Franklin, Kentucky. So, Janet, we are established. We have a firmer tone in the cattle to start things out. Hogs, I don't know. We'll wait and see.